program is presented by Tyro, the bank that's born for business.
This week on Entrepreneurs, our panel discusses the different ways to fund your business. Plus, the man behind an innovative Aussie sunscreen brand that's taking on the world. And we hear an elevator pitch from a business that's bringing product sampling to Airbnb. Entrepreneurs starts now.
On Sky News Business, this is Entrepreneurs.
Welcome to Entrepreneurs, where we talk directly to the founders of Australian businesses, from startups and small business owners to the icons of industry. I'm your host, Jack Delosa. Tonight we're talking finance and funding. How much is enough? Where do you go to get it from? With so many options, how do you know what funding path is right for your business? To help me answer those very questions, I'm joined by our expert panel tonight. Tanya Titman, an accountant, SME growth coach and serial entrepreneur. Rebecca Campbell, an investment coach and founder of Hey You and Zambesi. And Stephen Marbani, a fund manager, angel investor and co-founder of Venture Crowd. Thank you all so much for joining us. Tanya, we'll start with you. You're an accountant, a numbers coach, a business founder yourself. What are some of the key challenges you see so many Australian businesses facing when it comes to funding and financing?
Yeah, look, it's a really challenging landscape, I think, for small business. And you know, what we see is that traditional funding is really difficult for small business because you need, 2 to 3 years trading history, solid trading history. You typically need bricks and mortar security. So it's a really challenging landscape. The thing that we tend to find, the other challenge for businesses, is that they don't tend to go and look for funding other than at the point in time when there's a crisis happening.
Yeah.
So, we know that the best time to go for funding is when you don't need it, but typically what happens is they're running their business by the bank account and, a crisis hits, and that's the worst possible time to go and look for funding. So, getting some education, getting some understanding of the numbers, getting some forecasting and actually being able to predict a crisis is certainly something that's going to help small business.
Is there one common challenge you see often going into so many businesses and seeing under the hood? Is there something that sort of startles you most of the time in terms of common mistakes?
I think it is, it is that whole cash flow management. So most businesses will tend to, a good day is when there's lots of money in the bank account and a bad day is when there's none. But that has no relationship to profit in the business. No. And so, when we see that, that's a common, I guess, problem that we see in business. And it's also a big indicator that they really have no idea about funding, when they need it, and sort of actually being able to anticipate and get the best deal. If they're doing it at that last minute, then they can't get the best deal for themselves.
Yes, left it too late. Rebecca, you've raised over $15 million personally from investors. Talk to us about what you've learned in terms of successfully raising money from investors and how to do it.
Sure. I think that's one of the mistakes that most founders make, and I certainly made for many years when you're raising capital, is you kind of spend a lot of time working on your business, and then you're thinking about what you want to show to investors, and then you build this fancy pitch deck and you practice pitching it, and then you set up a whole lot of meetings and you go and pitch to a bunch of people and then wonder why no one says yes. I think that when I look at the investors that have actually invested in me and my business, they're people who I've established relationships with over a long period of time. And so I think that to successfully raise, you should be building relationships from 6, 12 months out, learning about the investors. These people will be helping you build your business. You'll be almost like getting married to them. You don't want to be asking to get married on the first date.
It's a commitment.
But it's true. You don't want to ask people. It's almost like asking to get married on the first date when you go on and do a pitch and expect to get a yes. You should be learning about them. Are they the right people to support you in your business growth, and and allowing them to get to know you and form a relationship and with you and your business mission.
It's so important. I do think that's something business owners overlook a lot of the time. It is, let's get the pitch deck together and go have the discussions with not enough emphasis put on the relationship in the first place. Stephen, you're quite a well-known and very active venture capital investor. You're also on the board of Venture Crowd, and you know that's obviously centred around crowd financing, which is a relatively new sort of theme. Talk to us about crowd financing and how that's emerging.
Yeah. Essentially, equity crowdfunding is no more complicated than a group of people investing together in the same venture and doing that online. It's really as simple as that. And that venture might be a startup or an SME or a company that's looking to IPO or a property development project. The interesting thing about crowdfunding, it's topical today, but actually a group of people coming together to invest in an emerging technology company has been happening for years. It's not a new concept. Where the difference is, though, is since the legislation changed in September, now the ability, and because we have enabling technology which allows us to get to a lot more people a lot more quickly, we now have a situation where a company like HeyU or Zambezi.com, run by someone like Rebecca in a capital raising phase, can now have access to a greater number of investors through the digital platform much more quickly and much more cost effectively. And I think that when companies are looking from here on in the process in Australia at a capital raising process, the capital raising stack is completely changing. It's not just angel investors anymore, it's not just accelerators, it's not just venture capital firms. All of those things remain relevant, as do all of the government grants. Commercialisation Australia is relevant, R&D grants are important, the employee share option plans are important, but equity crowdfunding will now form an integral part of the capital raising process. And if I look at a market like the UK that's had equity crowdfunding for the last 4 years, last year 24% of all VC money that came through the UK went through one of 2 equity crowdfunding platforms.
Wow.
Over a quarter, just under a quarter. Now, if I translate that into Australia, which is a comparable market, that's a huge potential pool of capital which will be controlled by digital platforms, basically facilitating contact between companies like this and a much broader range of investors, and doing it in a way that you just can't do as a traditional broker.
Yeah, yeah. And if we go to the other side of the coin for a second, do you guys see businesses raising money too early? And is there some value to a business being relatively cash constrained for a period to give them the opportunity to develop the fundamentals? Rebecca, I know you have a story around this.
Yeah, well, my first business, and my biggest mistake in that business, was I raised money too early.
Yeah.
So I went out with, it turned out that I was quite good at selling, so I went out with my PowerPoint deck, and over the course of a year, and many knows, I managed to raise $1.5 million off a PowerPoint deck with no proof of concept, no team, nothing. And then I set to work hiring a team of engineers, hiring designers, hiring salespeople, and discovered that my model didn't work. It worked in some ways, but it was never going to be profitable. So I had to then scramble. I had a burn rate of $80,000 a month to pivot to the next kind of plausible thing that was somehow related to the first thing to show progress, so that we could continue the business and try something else. And it would have been much better off. And I've definitely taken that lesson into Zambezi and gone, okay, I'm going to bootstrap for as long as I possibly can, make sure that the business model works, that I can build a viable business, that I know how I'm going to grow it, and then take capital in, and then I can scale it.
Very sound advice, very sound advice. Just in the interest of time, Tanya, I want to go to you and talk to you about alternative funding. We've seen the rise of this recently. Talk to us about how that's fitting into some SME models at the moment.
Yeah, sure. It's quite an exciting landscape, I think, for small businesses particularly, because, where they can't and previously haven't been able to get access to funding, now we have, quite an explosion of opportunity in the whole FinTech space. So, providers such as Tyro, who are coming to the market and using the data that they have through their merchant facilities to go back to the small businesses and offer them funding. So it's sort of like tapping you on the shoulder saying, we think that you can actually have access to this funding based on your trading history. So it really turns the whole thing on its head, and small businesses now have access to funding which normally would require much longer trading history, much more security, and it facilitates the payment back of that funding funding through their cash flow. So it's a great solution for small business, and you know, so many options that are out there now. And I think we're seeing just the start of it. So whilst it may be capped at smaller amounts initially, I think that, you know, the success of this as it goes into the future, it's going to really open up, you know, opportunities for small business.
Yeah, it is a game changer at the small business level. Stephen, as an active venture capitalist investor in Australia, what do you look for in businesses that come and, you know, try and build relationships with you guys and pitch?
Yeah, and I think it's interesting because it backs off what Rebecca was saying about going to the market too early without having a proof of concept. So the first two things that I look for are consumer validation and technical validation. So I want to know that the product works. I want to know that it does what it says it does on the box, and then I want to know that there's somebody who's prepared to buy that product from the business owner at the price that they've got in their forecasting, right? So is the pricing structure real, and is there a market that's going to buy it? Then from there, looking at that customer and trying to work out whether the entrepreneur understands how to scale customer acquisition in a cost-effective way, having that built into the forecast, and then seeing whether that's realistic. And if it is, then you've got something you can back. Then you've got a scalable strategy which has been proven even embryonically that funding can help to grow.
This was a very useful panel conversation tonight, and if you can hang around, we'll debrief the Icon interview once that's done as well. Next up, we meet Matthew Collette, the co-founder of Solar D, the innovative Aussie sunscreen brand that's taking on the world. Matthew is sharing his journey as an entrepreneur with Yi Ting Ng, the founder of customised skincare Hop and Cotton.
Solar D is invented by a Californian. He's a chemist by background. He sort of started patenting and inventing the technology back in 2009. Realised there was a hole in the market. Vitamin D deficiency was a growing epidemic globally. I mean, there's 1 billion people worldwide with vitamin D deficiency now. So he came up with the concept. Like many inventors, wasn't quite experienced enough to commercialise it. My business partner and I, Titus Day, had been down this avenue before. We'd been involved with startups, so it was a perfect match. It was an accidental meeting, like a lot of these things, and we just saw the advantage of it once we'd done our R&D.
Why did you choose a product business like Solar D instead of a technology business, as the cost difference is quite substantial? Yeah,
it's a very good question. I guess, like any venture, you don't probably recognise the costs involved when you start something. Again, coming from my original background was financial markets. I started up my own company, investing and managing other businesses. So I had a background of, I guess, startups, not so much about the product, more about the business and how to develop a business across different models.
So how long has it taken to get to where you are now with the business, and what were some of the key milestones and challenges you faced?
The technology started being built in 2009. The patents were put in around the same time. Patents are all around the world, not just Australia, so US and Europe and Asia. So that was the first part of it. Then we had to develop the technology. So that was, that period was about 3 to 4 years. We manufactured our first product in 2014, and we went through a couple of stages of I guess, testing the market to start with, and then we sort of reformed, made our mistakes, and then changed the formula slightly, so it's a better formula than it was 4 years ago. The formula now lets in sort of the optimum amount of UVB light, so we can produce vitamin D, whereas previously it wasn't as good. So we've rebadged it, we've relabeled it. So look, it's really important to get out of the market and do your testing, get your approval, make sure there's acceptance of the product to start with, and then you build on from that.
Solar D has a very strong suite of investors behind it. Can you share more about what most investors look for, other than the financials?
Yeah, look, it's a good question. I mean, again, coming from a startup to where we are now, we're probably a little bit beyond the startup stage. We probably consider ourselves in the SME space. So each time you go to market, you know, my business partner and I, we're invested in the start. We've got family and friends in. So that's sort of that really early stage sort of seeding start. And so people are looking, they're not looking at financials because you don't have any. It's all about the trust in the people running the business. So that's a huge part of it. If you could have the greatest idea in the world, but if no one trusts you or sort of gels with you, then you've got no chance of raising money. So those early stages is all about the future and the people involved in the business. The next stage is sort of, you know, your first round of funding when you're sort of kicking the business off. And again, there's a lot of trust in there because your financials are pretty slim, but you've got traction. So that's what I guess that second round they're looking for. Proof of concept that the trials have worked, or you have had a soft launch and that's worked, there's been acceptance. In our case, we were in Woolies, which was a huge asset. Although we weren't generating huge space in Woolies, we were in Woolies. So when we were going around to investors saying this is the future, this is where we're in now, this is what we're looking to be in, you know, that's what the investors look at. And now we're sort of, we're in Chemist Warehouse, we're in Woolies. We've got a distribution deal in the US, South Korea, just been accepted into China and India. So that's our next step. So we're doing a capital raise now for that expansion. So every step of the way has a different story, I guess, and you're talking to different investors. So the early stage guys, they're taking all the risk. They come in at a much cheaper price, and as the business grows, your share price sort of gets revalued. And so look, we've got probably two very strong, well-known private equity groups invested in the business, and they're our, I guess, cornerstone investors and have been great supporters. I guess whether it's luck, it's sort of a mixture of luck and good management. We had them on fairly early in the piece, so they've sort of come along for the ride and help. They're great because you can bounce ideas from them, as well as they invest in so many businesses. They're great to speak to.
Congratulations on the KW International deal. Will your products be sold in stores internationally, or will sales be predominantly online?
It does vary depending on which country. North America is a mixture of both, in-store and online e-commerce through Amazon and Walmart. In most of Asia, we're talking about e-commerce only. Because that's a big part of the Asian buying pattern. So look, we will look to go in store down the track, but e-commerce is definitely the way.
An incredibly interesting story there. As part of their journey, at one point they actually structured a distribution deal that gave them guaranteed, you know, access to $30 million in revenue, which is testament to the non-traditional funding that you were talking about earlier. Tanya, talk to us about some more ways and sort of how that's becoming more pertinent. It's not just about equity or debt anymore.
I think, you know, when you're raising money, it's very much about, you know, making sure that you're bringing the right skills to the table. And if part of those skills are actually, you know, having access to certain distribution channels, then I think that's a really valuable thing to bring to the table. But it's not just about whether it's debt or it's equity. There's some really creative solutions coming out there. So you don't have to stick to that. You can actually get quite creative with how you structure a deal. Yeah. And Stephen, you recently invested in a company called Nextbit, where distribution was also really pertinent for that business's success. Yeah,
so I think the no-brainer on this is the best form of capital is revenue. Yes. Right? So if you can secure customers, you're much better off doing that than looking to dilute yourself through an equity raise or a debt raise. But sometimes it's helpful for, and the Nextbit guys in particular, when they were able to secure distribution through Woolworths, through Coles, through Aldi, through 7-Eleven and the Domino's deal, all of that completely changed for them. The pressure was suddenly off to raise capital. They're still looking for capital for expansion programs with their foreign sort of strategy, but they don't need to raise it, and they don't need to raise it immediately because of the balance of revenue through distribution.
Panel, thank you so much for coming tonight. That was a really rich and meaningful conversation. I'm sure a lot of viewers got a lot of value out of it, so thank you all very much for coming. Up next, an elevator pitch of a different sort as an entrepreneur seeks advice, not just cash.
You're watching Entrepreneurs on Sky News Business.
We started Messina simply to make the best gelato in the world. We're absolutely obsessed by the process, the entire chain of events that happens from the production of the product to how we interact with our customers. Actually super important to us. Don't compromise on the quality of the product that you're producing. Understand what it is that you're selling and why you're doing it. We're trying to make the best product in the world, and so there's no point making something that cuts corners. So we make actually every single piece of what we put into our cabinets in a gelato, we make from scratch. The reality is that Tyro provided a terminal that was wireless and we could use in a really confined space. There's virtually no space, and we have very busy stores, so we needed something that was portable and wireless and helped us transition from a cash-only business into a business that accepts card payments.
Tyro, the bank that's born for business, offering FPOS, deposits and lending for Aussie businesses.
Hello and welcome to International Towers, home of the elevator pitch. Today we're going to meet Jen Liston, the founder of Love That. Jen is looking for some tech advice.
We're here with Emily Rich today, and Emily, like many investors, wears multiple hats. So you're currently a partner with StartMate, also a partner with M8 Ventures, and prior to that, Emily was a technical co-founder of an enterprise startup in the AI space. Thanks very much for joining us today, Emily.
My pleasure. It's great to be here.
Jen's going to talk to you in the elevator for about 60 seconds about what it is that she's building. What she's after from you today is actually some technical advice. So you guys will have a chat about that afterwards. Great. Jen, great to meet you.
Hey, nice to meet you.
So the rules of the elevator pitch, Jen is going to pitch Emily about her business for about 60 seconds. There's the opportunity to ask a few questions, and then Jen's going to get some feedback from Emily on the stage that she's at and some technical advice about Love That. Ladies, are you ready to do this?
Ready. Do it.
Let's go.
So at Love That, we create campaigns for brands centred around product trial using platforms like Airbnb. The key for us is that product trial is undisputed in its effectiveness to sell products. We work with brands such as L'Oreal, Koala Mattress, HelloFresh, Frank Body, all different variations of brands who are all looking for different ways to get their products into the hands of consumers in a way that isn't awkward or clumsy or terribly expensive. And that's the beauty of Airbnb, is it allows us to do it in a situation that actually makes sense to the consumers. We're really happy with the traction we've got so far. We've been going for quite a few months, we've got some decent revenue in the bank, but we do know that to be able to get to the next level, we're going to have to create a tech platform. So I guess my ask, Emily, is how do we go from being a service-based business to a technical business without being a technical co-founder?
So what is the differentiating factor between Love That and the typical hotel partnership that we've seen for decades?
I mean, I guess our difference to the typical hotel partnerships is, number one, that we don't just work within the Airbnb vertical, so we're not just in that travel vertical, but also that our campaigns are very end-to-end. So you might arrive at your Airbnb and there's a mirror decal there, you know, with an invitation to try the product, snap to win, you know, all these different steps along the way that make it a fully integrated campaign rather than a straight product trial.
That's so many ones, yeah. Yes, I think what you've been able to achieve in, you know, just 6 months is really impressive, and you know, you've got so many great brands on board already, and I guess your question to me was really around how do you take to that next level and scalability. So, you know, I think it is a good idea to get a technical co-founder on board in that instance. You just make your product so scalable using a tech platform.
Thank you so much for your time. I really appreciate the advice.
Thank you. It's been great.
My name is Russell Zimmerman. I'm the Executive Director of the Australian Retailers Association. I also am the owner of a small business. Merchants see costs rising all the time, so they're looking at ways in which they can reduce those costs, like rent and wages and others. But merchant fees are also part of those costs. Banks are increasingly trying to increase those costs, particularly around the interchange fee, and that costs merchants a lot of money.
I'm Bronwyn Yam, so I look after products here at Tyro. We're here to support the SME community. So the biggest benefit for Tap and Save for merchants is that they're now able to reduce the cost of taking card payments. So Tyro wanted to be the first in market to deliver it because we really care about the rising cost for SMEs. And based on what we're seeing in terms of our data, we're hoping to be able to deliver a 6% savings to their merchant services fee on a monthly basis.
Tyro, the bank that's born for business, offering FPOS, deposits and lending for Aussie businesses.